Afternoon. Today I have two stocks in focus for us. One is Afcons Infrastructure Limited. It has an order book of 36,869 crores, and there is another company which is relating to a substantial export order for a railway stock for some railway stock set up in a few countries. So about three different countries. So first we'll go with Afcons. Afcons has a 36,869 crore order book, development across various sectors in focus after receiving new work order from Reliance Industries. Has secured 175 crore order from RIL for civil and structural erection work at RIL's facility in Jamnagar, Gujarat. This letter of commitment highlights Afcon's strong reputation in handling large-scale, technically intensive infrastructure projects. The scope of the work involves critical civil and structural components, and while the final completion timeline is yet to be decided, payments will be made on actual execution as per the contract bill of quantities. The contract reinforces Afcon's leadership in engineering construction sector, particularly in the industrial infrastructure segment. Being part of one of the world's largest oil refining hubs not only boosts the company's order book but also enhances its visibility and credibility in the industry. The railway stock jumps over 7% after receiving order from African rail company Aldeco diesel electric locomotives. So it's basically diesel electric engines, or you can say the engine as a locomotive. Also, the Rites Limited, known for its expertise in railway infrastructure and transportation solutions, the company has recently secured significant contracts, boosting investor confidence. The news highlights a new order for supply of locomotive for African operations, a joint venture product to redevelop an uh, Indian railway station, signaling strong growth in both domestic and international markets. Order update: significant order from African Rail Company for the supply commissioning of two fully overhauled Alco diesel electric locomotives. These Cape gauge locomotives equipped with new bogies, traction motors, control systems, and air brakes will be deployed across Zimbabwe, Mozambique, and Botswana. The overhauling work will be carried out at a nominated facility with the warranty support and deputation of a Rites technical team. The order, valued at 3.6 million CIF, $3.6 million, is expected to be complete within 9 months as per the international contract. It highlights Rites' growing presence in the global railway solutions market and reflects an expertise in delivering complex rail infrastructure projects ahead. uh, order order book breakdown: as per March 31st, 2025, the company's total order book stood at 8,877 crores. Turnkey projects contribute the highest share at rupees 4,235 crores, consultancy at about 3,000 crores, exports at about 1,360 crores, and leasing facility of 180 crores, and REMC at 120 crores. So, important disclaimer before we look at the financials. Information is extracted from the internet opinion of brokers, expert houses, and rating agencies. Stock market investments carry risk of financial losses. Author bears no responsibility for any losses. It is strongly recommended to consult a qualified financial advisor or expert broker to make before making any investment decisions. Okay, we'll have a look. One second. All right, here we go. We'll first look at Afcons Infrastructure. Okay, this is the logo of the company. Share price. So you can see 433 is the price, down 2% in the last 5 days, 2.5% up in the last 1 month, negative of 20% in the last 6 months, and a negative of about 9% in the last 1 year. Incorporated 1959, infrastructure, engineering and construction company, price 433, high of 570, price to earnings ratio of 33, book value 143, so almost 3 times its book value. Dividend yield of 0.59%, return on capital employed 20%, return on equity 11%, face value 10 rupees. Poor sales growth of 5% in the last 5 years, low return on equity of 13.6% over the last 3 years. Promoters have pledged 43.5% of their holding. Earnings include another income of 474 crores. Dividend payout is 14.9%, which is low over the last 3 years. Company's cost of borrowing is high. Working capitals have increased from 72 to 115 days. You can see the revenue has been more or less stagnant in the last 4 quarters. You can see the net profit has dropped from 149 crores to 111 crores, which is concerning for the company. In terms, you can see the overall revenue has reduced in FY25 as well. This is another big concern. However, the net profit has increased. However, it's quite marginal compared to the overall expectation of the market. Just 10% net profit growth, and there's a dip in the net revenue, which is negative of 5%. Overall return on equity is 11%. I think the Afcons stock is recently listed on the stock exchange last year, so that is the reason why there is no comparison of stock price over the last several years. You can see reserves have increased primarily due to the IPO allocation and the premium that is charged by the company. The borrowings have reduced by about 180 crores, which is a good sign. Now we look at Rites Limited. Sorry. Rites share price. First we look at the logo. That is the logo of the company. Currently 3% down today. Last 1 month 2% return. Last 6 months a negative of 3%. And overall 18% lost in the last 1 year, probably due to the stock market correction in October, November. Yeah, so Rites Limited is a public sector enterprise leading player in the transport consultancy and engineering sector in India, having diversified services and geographical reach. The company is the only export arm of the Indian Railways for providing uh, rolling stock overseas other than Thailand, Malaysia and Indonesia. Price 286, price to earnings ratio of 36, book value 55 rupees. Company is trading at 5.1 times its 5.2 times its book value. Dividend yield of 3.99%, which seems to be good. Return on equity is 14.7, return on capital employed is 20%, face value 10 rupees. Good healthy dividend payout of 99%. Poor sales growth of minus 2% in the last 5 years. Sorry. Uh, you can see 10% revenue growth in the last quarter and has been consistently growing quarter on quarter, which is a good sign. Net profit is grown by about 30%, which again is a good sign. And it has been growing in the last 2 quarters, which is a good sign overall. Then you can see overall the revenue has dropped in the last 2 years and the net profit has dropped as well, so not a very good sign. There's a drop in overall sentiment of revenue and net profit, which impacts the sentiment of the investing shareholders. So that is something that the company would need to keep a track of. You can see everything apart from the return on equity, which again is less than the previous years. It shows everything at a negative of 10, 15, 15, which is not a very positive sign. So friends, thank you for watching. We'll connect with another video tomorrow. Please share this video with your friends, family and associates so they could all benefit from this information. Thank you for watching once again. Share any improvements that you feel that could improve the overall presentation information for you, for everyone. So thank you very much once again. We'll connect with another video very soon.